please.
Welcome, everybody. Thank you. This is the first, thanks for coming. This is the first of hopefully what will be a very long series of different adults coming in talking about their careers. My name is Dan Lubeck, and thank you for giving me a little of your time. Appreciate it. So I'm going to start out by asking you guys, raise your hand if you've ever done a maze when you were a kid, you know, mazes. All right. Did any of you ever discover, again, raise your hand if you discovered that if you start at the end of the maze and work backwards, it's easier? All right, so pretty much everyone's figured that out. Well, I think the point of this series, and thank you, Mrs. Miller, wherever she went for putting this together, is that if any of us can give you a vision of what your end of the maze could look like, then it might be easier to navigate your way there. You might have a straighter path. You might make decisions where, you know, not that going down the dead ends is a bad thing because you always learn something, but if you have a clear vision of what you want to do, then maybe hearing about it in one of these talks will help you guys. It'll help you focus on what you want to learn, what skills you want to improve, where you might want to go to school, what kind of job you might want to get out of school, etc. So hopefully that'll happen. It may not happen today. But maybe in one of these talks it will. So what I do is private equity investing. Does anyone know what that is? All right, here we go. Brave soul. What's your name?
I'm Cole.
Cole? All right, what is private equity investing?
So, like, in kind of summary, basically what you do is you go to small businesses or startups that you think have potential, and then you raise capital from high net worth individuals, and then after you raise the capital, you try and bring the company public and
all right,
like an IPO.
That's a good start. Which candy would you like? Snickers, pretzel M&Ms, or Skittles? Snickers. All right. So Cole gets a reward for being brave. So he's pretty close. The general private equity, and by the way, it's an enormous business industry because it covers so many things. It really means taking private capital and putting it into companies, whether they be public companies or private companies. And there's all different types of private equity. It starts with early stage investing, which would be venture investing. A lot of people say venture investing when they're actually talking about private equity. That's a type of private equity. Then you've got leverage buyout, which is what I do, where you're going in and buying part or all of operating companies. Then you've got types of debt, like mezzanine debt, which comes above equity in the capital structure, and then you've got senior debt, etc. So there's private equity firms at all those ranges, but basically what it means is in one way or another you're working with companies, whether private or public, to accomplish a good return on your investment. All right, I'm going to ask a couple more questions. When I say leverage, does anybody know what that means? Anybody? All right, so leverage is debt. So if you ever heard the term leverage buyout, have you heard the term leverage buyout? That means you're investing in part of a company and you're using equity, and then also you bring in debt. All right. So let me talk a little bit because we don't have a whole lot of time. I think the bell rings in about 25 minutes, right? So I'm going to talk a little bit about what I do, why I love what I do, and then we'll do a lot of Q&A. But please, if I say something that you want us about, please don't be shy. Ask me questions. Questions usually get rewarded with candy, so just as an incentive. So my job consists of a number of things. I spend a lot of time trying to be introduced to and then meeting owners of businesses and senior executives of companies. I do that by having meetings with CPAs, with lawyers, with senior lenders, you know, people who work at Wells Fargo or Comerica Bank, and asking them, hey, do you have clients that you know of that are thinking about maybe doing something that involves equity in their business? And then if I get introduced, then we have those conversations. Who knows what equity is when I say that? All right, you already got your candy. Mr. Rogers.
How much of a company someone owns?
All right, it's close. That's a good. Danny, what would you like?
I'll have a Snickers, please.
All right. All right. Oh, Danny. That's surprising. Danny has very good hands. Okay, so equity in a company, there's really two kinds of things. I'll keep it simple. There's equity and there's debt. So when I say I'm an equity investor, that means we invest capital at the shareholder level. So when we're making an investment in a company, we become a shareholder. Debt is a loan. So when I put an investment in a company, it's not a loan. I'm not making interest. I win and my investors win if that company ends up being worth more when we're done than when we started. Lenders, on the other hand, debt, they get their money back first. So when a lender lends money to a company, they get interest. Sometimes the interest accrues, sometimes it's paid on a current basis. But at the end of the day, when that company's sold, or if that company does badly, the lender gets the first dollars out. So it's an important distinction, and a lot of the stuff I'm going to talk about, you got to think about what kind of person am I? Do I like taking risks? Do I not like taking risks? For example, if you like taking risks, then you're probably going to lean more toward the equity side of investing. If you're more risk averse, then you might lean more toward the lending or debt side of investing. So I spent a lot of time going around meeting people that might know companies that are looking for an equity transaction. It can be for a lot of different reasons. It could be because there's a founder that's gotten less interested in the business or older and isn't running the company day to day, and that there's a younger management team in there that want to buy the company from the founder. Those are great deals for us because then we partner with that management team, we buy the company, and then we help those guys grow the business. I'm going to ask you guys, if any of you guys get this right, it actually earns more than candy. And this is our philosophy, okay? What do you believe our philosophy is, and there are different ones out there, it's the most important thing about a company when we're looking at it? What do you guys think is the most important thing about a company?
Potential.
Potential's a good one. That's obviously, truly that is the most important thing, especially because we're looking to grow companies. It's not the answer I'm thinking of, but what's your preference here? These are, by the way, pretzel M&Ms. We believe these are the best M&Ms, but everybody's. What would you like?
I'll just have those ones.
All right.
Thank you.
Yes.
Dedication from the employees.
That's a good one. It's important, but it's not the answer I'm looking for. Is it good enough for candy? I don't know. What do you guys think?
Yeah, sure.
Yeah. All right. What would you like?
I'll take a Snickers.
All right. Right, one more guess. Yes. Stability. Another good aspect. All right, what candy do you want? And then I'm going to answer it because I'm giving away candies, and I don't know where to get the right answer.
Pretzel.
Pretzel? All right, nice. Okay, so if our company is called Solis Capital, and if you ask anyone at Solis Capital what the most important thing is, we're going to all give you the same answer. It's the leadership. It's the senior leader or leaders. And I'll tell you, one of the things why I was drawn to this business, I was an economics major in college, and then my vision was always to be a real estate developer. I think real estate's a really interesting thing. If you look around our area or any areas, a lot of wealth has been created in real estate. And so if wealth creation is your highest priority, then real estate's a career you should look at. It's something that that grows in value over time. If you're not too aggressive or take too much risk, it can be a great, phenomenal way to create a great life. Ultimately, I chose not to do that as a profession because after I went to undergrad, I went to law school and then started practicing real estate law. And then my first mentor left, and after that, I started practicing corporate law. And I started representing small companies and just seeing how fascinating that was. And I think I was very drawn to small companies because unlike real estate that has a implicit value, a piece of dirt's going to be worth something almost no matter what. It also has a theoretical limit. Companies, on the other hand, they could be worth nothing. They could also be worth billions. And in my opinion, and the opinion of the other people who work with me, the big difference is the quality of the leadership. I mean, and there are exceptions, but even if you look at, what's that app company that just sold for $17 billion? WhatsApp, okay. That was a 5-year-old company with 20, you already got candies, with 20 some odd million of revenue that sold for $17 billion. That's an anomaly. But I will tell you those guys had great leaders. They were able to win a market share that was higher than everybody else, and create a value proposition that Facebook really wanted. So, yes.
When you're looking to buy into a company, are you ever worried if it's like too early? Like, how do you gauge that for you?
It's a great question. You know, again, if you think back, the difference, we're not an early stage investor. Okay, so venture investors, angel investors, those are the early people in. And there's a whole set of private equity funds that all they do is venture investing. So they're looking around for the ideas, the pre-revenue, pre-profit type companies. We don't do that type of investing. So as it applies to us, we're looking at companies that have a track record of profitability. Usually we say for at least 3 years. Some of the companies we're investing in are 40 or 50 years old, some longer. So for us, it's not as much of a consideration as it's too early. For us, the main, other than leadership, we're looking at, is this company at a point, at an inflection point, where if we partner with the existing management, can we help it grow and become a lot more valuable? So, any other questions on that? No? No? Kyle? Okay. Yeah.
Generally, how big are the companies you guys are investing in?
That's a
You're
great
saying
question.
smaller companies, but what do you mean by that?
Thank you for asking that. What candy would you like?
M&M's.
M&M's? So that's a great question. I'll tell you why. Because we are lower middle market, which there's no clear definition, but lower middle market to us means like 15 million to 70 million in revenue. And usually that means, and this is, if anyone can answer this, 2 million to 7 million EBITDA. Anybody heard that? If anyone's heard that before, you're a kid of a private equity investor. EBITDA, do you know what it is?
I knew yesterday.
Really? Yeah. Are you taking like a finance class or something?
Yeah, something like that.
So EBITDA is earnings before interest, taxes, depreciation, and amortization. But really what it means is cash flow. Like how much money is the company generating when you take out interest, taxes, depreciation, and amortization. Okay? So our EBITDA is like 2 to 7 million. So then those, by the way, even though those sound like big companies, those are lower middle market companies. Then there's middle market, which is usually, you know, somewhere bigger than us and below, let's say 250 million in revenue. And then there's the big companies. And there's private equity firms that do lower middle market like us. There's middle market ones, and then there's some private equity firms that are multi-billion-dollar firms, and all they do is the big deals. We like the lower middle market. It's a passion for us. You know, going back to why I chose doing what I'm doing. So what we do is we make an investment. It's an interesting process because, you know, I think we're successful at it because we're good listeners. I will tell you guys that if you want to ask me what the most important skill for success is, it's listening. It's the ability to be patient, to hear information and not judge it, and then be able to respond to it. It's listening to teachers. It's listening to your parents, which I know is hard. It's hard for parents to listen to kids too, so that goes both ways. But out in the business context, it's about when I sit down with a business owner particularly, I want to hear what's important to that business owner. What do they want to accomplish with the transaction? That's the number one consideration. Then number two, what does the company need in the transaction? Does it need more working capital? Does it need more leadership? What changes are going to have to be made to help it realize its potential? And then can we create a structure then that also generates a return for our investment? So that's our considerations. Any other questions on that sort of concept? Yeah.
So how far does your help go? When you say you partner with them, obviously financially you help them out, but do you help with their corporate structure, their business model, or do you just kind of give them the money they need and kind of take a back seat from that point on?
It's a great question. What candy would you like?
Snickers, please.
All right. Great question. And again, every firm has a different philosophy on this. Our philosophy is we really want to be great support to our management teams. So we always sit on the board. The board will meet once a quarter. I'll say one of the most important things we do, and if you guys can walk away with this nugget alone and use this if you're in a business context, the most important thing we do with the companies we invest in is help the teams come up with a strategic plan. And this is not a budget. Most companies have a budget, which means, hey, what are we going to do next year, roughly, and how are we going to do it? We help them create a strategic plan, which is not what are we going to do next year, but what do we want to be? Where do we want to go with this? And that, to me, is the single most important thing we do. And then to answer your question more specifically, we'll do whatever we can to help them realize that strategic vision. It almost always means helping them hire some additional talent. Most entrepreneurial companies, they don't have a deep bench. The entrepreneurs typically don't invest in strong senior leadership because it's expensive, but it also holds back their growth. So we often do that. Often in sales and marketing, they need help. Often just how they manage their accounting and the visibility of their numbers is important. So we help them with that. Really our attitude is we view ourselves as supporting our management team. So wherever we can be helpful, we are. But those are the areas where we typically are adding the most value. And then where our job is to stay out of their way. Again, that's our philosophy. There's some guys that like to really micromanage, and our attitude is if we have to micromanage our leaders, then we have the wrong leaders. Yeah.
So if your firm ever sees that the leaders can't, the management team can't bring it to the next level, do you ever go and find an experienced executive and bring them into that company?
Absolutely. I mean, it's not certainly something we like to do, but if we have leaders or leadership teams that consistently fail to hit what they think they're going to hit, then we try and figure out why. But ultimately, we feel it is the responsibility of the leadership how the company does, unless there's factors that have happened in the marketplace of the world that are completely out of their control. And we'll figure out where we think the weaknesses are, and we'll help the company get there. I mean, this last investment we made. 1 second, I'll get you. Was a company that had a husband and wife and a brother, and we actually were partners with that team, and their founder. They all created this company, and 2 years into it, we kept missing our objectives and quite frankly losing opportunities in the marketplace. And after long discussions with them, it became clear to them, and we're very proud of them for doing it. Is they realized that the best thing they could do for the company is step aside and take a seat on the board and then let us go and recruit someone that's really good, and that's exactly what we did. So there's a great example and that's probably one of the hardest examples, because here's a founder, CEO, and his wife that both decided the best thing for this company is to step back and hire someone that's really great, and we just did that, and now we're very hopeful they're going to get back on track. You had a question.
How often do companies comply with your interest to invest in shares of the company?
What do you mean?
So, normally, do companies come to you to ask for investments, or do you guys search out companies and say, "Hey, we're interested in buying shares"?
That's a good question. What candy would you like?
Oh, Snickers, please.
Snickers? I like that you guys pick those. They're the easiest to throw. So, it's both. I'd say we're not great marketers. There's some people in this world, and there's probably some of you sitting in this room, that just are marketers by nature. That you're great at getting the word out there, creating excitement. You can bring people to places, and those are great marketing skills. I think we're more Midwestern, and that we have more of a build it and they will come mentality, and so that's how we've done. That being said, our marketing is much more one-on-one, so we do spend a lot of time with lenders and lawyers and CPAs to teach them about our ideal investments, and we get a lot of calls saying, could you at least give this client advice about what they might do? They're thinking they might need an equity transaction. So those are calls we get. We still have to go meet the company and the business owners and see if there's a structure that would work for them and for us. Sometimes we get calls saying, hey, my friend told us about Solis, and we'd love to talk to you about a transaction, but that's a small percentage of the time. Yeah.